Hello everyone, Jesse Webb, TradersPro. Let's take a look at market conditions here. We saw a little bit of reprieve yesterday, but things are sliding this morning again. Looks like futures are down 65, 70 points. So we're going to gap lower at the open. And that is definitely, as we talked yesterday and the day before about being very cautious right here, I would definitely steer clear in terms of adding new positions or looking to be really aggressive. We talked a little bit yesterday about bank stocks and some of the possibilities for a short-term bounce there. That is a pretty aggressive bearish or bullish type of trade over a reversal, and that gap happened yesterday, and we'll see if we get any type of support here. Bearish conditions in a bear market means traders, investors should consider trading with a bearish bias, shorting stocks, buying inverse ETFs, or put options. Again, that's for aggressive traders. For more conservative traders, it's simply going to be sitting in cash and or tightening up your stop losses, getting rid of losers, looking to see where your risk sits on some of your losers, and if it's starting to hit a pain threshold, then consider cutting losses on those, or at least trimming back some of the size. Do the opposite on winners. Hold on to those as long as they're not underwater and starting to lose money for you, and or set up a stop loss again just to be able to mitigate risk on some of those positions. This market fear seems to be accelerating. We'll see if any other shoes drop here with the banking system. I haven't had a real good chance to look to see on any of the news items that may be happening this morning, but I think it's still continuing around the bank issues. Momentum's heading lower. Breadth had a little bit of a pop here yesterday, but we certainly are probably we are more than likely going to test these lows on breadth and momentum, especially where we're getting that acceleration to the momentum, and we're starting to see this start to dip back down now. That's what we want to see for a market bottom. We've got a long way to go in terms of this sentiment. If it needs to get down here for another market bottom to happen, then that's what we need to be watching for. Let's take a look at the buy-sell ratio here as well. It is, it's kind of topping out. If we look back over the last 3 years or so, you can see, let's actually go back 4 years because it shows that COVID spike. This is the COVID spike right here when we really had aggressive selling. We really sold off, and buy-sell ratio was as high as it has been in a while. Now, we did see that here in that October low. But this low right here, we're definitely back up into ranges that you start to see the selling dry up because there's no one left to sell. Although we could see, and this is not about price direction. This is about the number of stocks that are downtrending. So that's why it's going to start to top out, is just because the database is like, there's no more stocks that can move over into that sell signal, and that is that doesn't mean that the price, once they're in that sell signal, could continue to decline. Okay, so I'd be watching this number and also this sentiment one here as well to see if we dip back down. We may be getting closer to a tradable bounce, but if we start to see this really emotional, aggressive selling come in, then we're just not there yet. The volatility index, the VIX, we want to see that pull all the way back to here, okay, for a real sustainable market bottom, and that's where we're at right here. This is why that volatility was just so low, and we really hadn't seen it spike. So keep an eye on that. That's also under the market trend tab, and then sentiment, and then scroll down here to market volatility. You can take a look at that. Some bonds are interesting here. You're seeing that these ranges work pretty well in terms of ups and downs. The extremes are where you're a contrarian type trader. It feels ugly and it feels bad, but we look at ththings like gold as it's starting to move, even oil, light sweet crude. So oil has had a pretty decent pullback. It's in that range. It could pull back into an area where we're starting to see some some support. Let's look at that USO chart and see. Here's that USO chart. If we go back a couple of years on that one, you can see that we may be breaking through the support. A lot of support right here, and we could see oil drop back down. That, wouldn't that be nice in terms of our gas tanks? I know I drive a truck, and it's been a gas hog the last couple of years. Let's look at leading sectors to see if we're seeing anything moving. Utilities, not a whole lot here. We have seen oil and energy just really pull back here. That's going to be a part of with that oil trade starting to move back lower. Muscle stocks, the new buy list, we did see a handful. There weren't very many in there the other day, but we're seeing some that are popping back in. Some interesting names down a little bit lower in the group, like Hershey. Hershey is going to be a consumer staple type stock where people are going to buy chocolate bars and goodies and everything else Hershey provides, whether or not we're in an uptrend or a downtrend or a recession. That's why it's a consumer staple. It's kind of a requirement. We need some of the products of these type of companies as humans, and so we're going to be continuing to purchase those things for the most part. That's kind of the idea behind that consumer staple as a safety type trade. And if we take a look at what was the other one that I saw in there, I thought I saw Nvidia. I think it was maybe down a little bit further. There's Hostess Brands as well. It's kind of going to fall into that Hershey's type idea as well. Oh, here it is down here. Nvidia was right next to that. Nvidia has actually held up really well. It's a GPU producer, which a lot of cryptocurrencies and really high-powered computing is done, but with NVIDIA chips. So you're seeing a bounce on those. Be an interesting day today. Stay safe out there. Make sure your risk is intact. Make sure you understand where your risk is and where the potential opportunities lie. If you don't have full access to the site, you can sign up with the link below, and we look forward to having you. Have a great day today.